Renting is not throwing money away. Or if it is, then homeownership is also throwing money away. There are 3 key benefits to renting versus owning. First one is there's less risk. And this has to do with basically your ability to be flexible and move when you want to. If you're going to buy a house and move in 8 to 10 years, it is almost always going to be a bad investment. Because of the selling costs involved in buying and selling a house, there is almost no plausible scenario where owning beats renting in the short term. Number 2, there is predictable costs in rentals. You know how much your monthly rental payment is going to be. You can reasonably plan for that and expect it. Yes, you can know what your mortgage and your interest is going to be on a home, but you don't really know when the furnace is going to go out or when the AC is going to go out or anything like that. And thirdly, there's no investment illusion. When you're owning a home, it's easy to fall into the trap of upgrading your bathroom or your bedroom and making investments in it that you think you'll be able to get the value back out of. If you make a $10,000 upgrade to your bathroom, there's a very high probability that you're not going to get $10,000 of value out of that. Okay, so there's no illusion when you're renting. There is that investment illusion when you're buying. So let's address that renting is throwing money away. This is something you hear all the time. But like I said in the beginning, if renting is throwing money away, then so is owning a home, because you have property taxes and maintenance costs and mortgage interest. Those are all costs that give no residual value, okay? There's nothing left over after you pay them. On top of those 3, the biggest cost that you have when owning a home is opportunity costs. When you buy a home, you are taking a very large sum of money, 20% of the home for the down payment, and putting that in an asset that has long-term averaged 3% per year. Your opportunity cost is taking that down payment money and putting it in an S&P 500, which has averaged an 8% return over the last 100 years. So that 5% difference, that's your opportunity cost. And this is a huge cost that most people don't realize. It is also a cost that has no residual value. Let's assume you have a $500,000 house and it's fully paid off. You might think that there's no way a fully paid off home is a worse investment than renting. But let's go through the numbers. Okay, firstly, you have a $500,000 home. So you have $5,000 in property taxes and $5,000 in maintenance costs and $14,000 of opportunity costs. Okay, how did I get that? If you take your $500,000 home and sell it and keep 95%, okay, so we'll attribute 5% to selling costs, so that leaves you with $475,000. If we multiply that times a very conservative 6% rate of return, that comes out to $14,000 a year. Okay, so if we add the $5,000 in property taxes, $5,000 in maintenance costs, and $14,000 in opportunity cost, that is $24,000 a year or $2,000 per month. That is a $2,000 per month cost to owning a home outright with no mortgage interest, just owning the home. Does that really look that much better than renting now? Everyone will tell you that owning a home is a great investment, but if everybody in the world is saying that one thing is a great investment, don't you think it's time to probably consider if that's a good investment or not? It's a great investment for banks or for real estate agents or home improvement companies or builders for you to own a home, but is it a great investment for you? A lot of people just can't see these hidden costs, and it's way easier to see the real costs of renting versus the hidden costs of home ownership. The biggest contributing factor to home ownership, building long-term wealth, is the discipline it requires. You're not going to miss a mortgage payment. But if you're a disciplined investor, that is not an issue. There is no reason you cannot get rich being a forever renter. Let's go over a real-world example. Let's say you're considering buying a home for $500,000 or renting. If you buy the home, you're going to need to come up with a $100,000 down payment, plus purchase costs, land transfer taxes, and legal fees, and you're looking at a total down payment of $106,000. You'll have to finance the rest of the purchase cost, which gives you a $394,000 loan. At a 3% interest rate, mortgaged over 25 years, the monthly mortgage payment would be $1,893 per month. After property taxes, maintenance costs, and homeowner's insurance, we can expect about $37,000 per year in costs. We can assume that the real estate will increase by 3%. Conversely, you could take that $106,000 down payment and invest it into index funds. You can find a comparable home to rent for $1,875 per month and get $100 in renter's insurance. The total cost of renting would be about $24,000 per year. So we can take the difference between the $37,000 of home ownership and $24,000 of renting, and that $13,000 we can add to our investment portfolio. If that investment portfolio consists of 90% stocks and 10% bonds, we can expect a 6.6% annual return. Assuming this is all held in a regular taxable brokerage account, after fees and taxes, the actual return might be closer to 5.3% per year. If we fast forward 25 years, the homeowner will have an asset worth $1,046,000, which after selling costs of 5% will be reduced to $994,500. The investment portfolio is worth $1,017,000, and paying capital gains, it will be reduced to $987,500. The difference in cost is a negligible $7,000 in favor of the homeowner. In our example, the homeowner didn't move in 25 years. So if everything goes perfectly in favor of the homeowner at a very reasonable 3% rate of return for real estate, which is the long run average, you barely come out ahead and you give up all of the flexibility that you have if you're a renter. I would much rather have the renter's ability to move whenever and wherever they want, pay an extra $7,000 over the course of 25 years. And that's assuming the renter used a taxable brokerage account. If they would have used a IRA, the results would be heavily in favor of the renter. Obviously, it's impossible for me to go over exact scenarios and know which assets are going to perform at what rates over what time, but it is very likely that there will be a negligible difference over 25 years. Either one, home buying or renting, can make you rich. Renting is not throwing money away. I will most likely be a forever renter. If I buy a home, it is going to be 100% subjective and personal. It is not going to be for any financial reasons. Remember, homes do not appreciate in value. Land appreciates in value. The building deteriorates. When everybody thinks something is a good investment, it usually isn't.